Today is a day that we are actually releasing a policy study. The title is up here, formal title, Between Public and Private Mobility, the Rise of Technology-Enabled Transportation Services. But around TRB, it's known as the Uber study. The study actually covers more broadly topics than just the Uber and Lyft type companies. But because those services are the ones that have really created the biggest policy dilemmas, the report really does focus primarily on those types of services. But other types of services that they looked at were bike sharing services, car sharing services, those types of services that are web-enabled as well. So I'll get into now the conclusions. The first conclusion is that innovative mobility services are expanding travel choices and being widely embraced by millions of travelers. We need to recognize that it is a new service. It does increase mobility. It provides the opportunity for improved mobility, especially for those who don't own cars, and has the potential actually to be improving mobility if we address some of the policy issues in a very careful manner. Second conclusion, on its current course, continued expansion of TNCs threaten to exacerbate the digital divide. Roughly 8% of U.S. households, most of which are low income, lack bank accounts that allow them to have credit cards. These services require that you have a bank account that either has a credit or debit card. 36% of Americans currently do not own smartphones, and you have to have smartphones to be able to take advantage of these services. 50% of those who own less than $30,000 do not own smartphones, and 73% of adults over 65 do not own smartphones. And these are some of the target audiences where we feel that we have the greatest potential of actually increasing mobility. Third conclusion, regulated taxis do offer critical lifeline transportation services for disabilities. A number of metropolitan areas require taxi services to have a certain percentage of their vehicles being wheelchair accessible. If the transportation network companies come in and start to decrease the amount of taxi service that is available, we'll probably see a commensurate decrease in those mobility services for the mobility impaired as well. Fourth conclusion, public safety is a central and to date not fully resolved public policy concern with new shared mobility services. So, for example, taxi companies are required to have all of their drivers go through background checks. Transportation network companies do as well. But there is no evidence that those background checks really have done anything in terms of ensuring public safety. We need more information associated with that as well. Insurance issues. Taxis, again, are very heavily regulated in terms of insurance requirements with pretty high liability levels that are required. The drivers of transportation network companies often are part-time. They may be students. They may be people who are doing this on a second job basis. Sometimes they may have as few as 10 trips per month that they'll be serving. You can't have the same insurance requirements for someone that is providing 10 trips per month as you have for a taxi that is operating full-time 7 days a week. So conclusion 5, transportation network drivers, like most taxi drivers and workers in the shared economy, generally are classified by their companies as independent contractors rather than employees. A number of you may have heard about the lawsuit in California that one of the Uber drivers has brought and is now in the legal system in terms of whether that Uber driver really is an employee or is an independent contractor. And if an employee, then would be entitled to benefits that they don't get as independent contractors. Conclusion 6, the vast differences in the scale of transportation network companies compared with taxi services raise new considerations for regulators. There may be some state regulations, but in most cases, most regulations for taxi companies are at the local level directed to local needs. When you're dealing with a I guess I'll use the word behemoth, like Uber, you have to be thinking about it differently from a regulatory standpoint, and probably raises, at least to the state level, consideration of a number of regulatory issues. Conclusion 7, innovations in shared mobility services have the potential to change long-term travel and land use patterns, but we don't know how. When you think about it, if we're able to provide services that previously required people to be driving themselves, and they're now able to ride with others, or they're able to ride in a vehicle in which there is another driver for them, what implications will that have in terms of where they locate? What implications will it have in terms of their decision on whether they own 0, 1, or 2 cars? The panel really did conclude that these services do have the opportunity to really help improve mobility. And if done correctly, we can also be doing it in a safe manner, and we can be improving sustainability as well.